happy Monday. Hope it's prosperous and peaceful and full of life and liberty, the pursuit of happiness, wherever you are and whenever it is, and that you're doing good things. And by good, I mean not bad. So, what is happening in the land of sweet, sweet Bitcoin? Well, if you're one of those people who likes the orange coin, despite its scarcity and all that stuff, I say despite because there are many downsides to that, but there are also good sides to it. What is it doing? Well, if you've taken a look at the weekly time frames, you'll see that it is currently residing above that RMLR, to which it mean reverted on the last weekly candle, as I had been telling you it would do. Right? In fact, from the time it was down at around 49K, I said, watch out for when this thing stops banging away below this 3 standard deviation band. Right? And it had that little 1 or 2 weeks where it stopped, and then actually it was on the second week it dropped back to it, which is always a thing you can do. Right? I always try to tell people it's got to pass a couple of weeks. And in fact, I thought it did, but it didn't. If you look at the actual chart, even on the short look back length setting, you'll see that it didn't actually pass 2 whole weeks without touching it again. But even if it had, that is always a possibility, right? But after it started hitting it again, all that did was increase the probability that the next time it stopped hitting it, mean reversion would be in progress, and that's exactly what happened, right? It stopped hitting that band. 2 weeks later, we had confirmation that the mean reversion was basically in progress, and within a couple of weeks after that, mean reversion was completed fairly swiftly, right? If you look back over the weeks, I even told you on what week it was likely to do what, right? I even told you, like during election week, I said, don't be surprised if it does move to the upside, don't be surprised to see it go up a third of the way or a half of the way to complete that mean reversion from wherever it was in the low 60s. And it went up. Right? It went up from the mid 60s somewhere to like 80 or something. And then next week, I said, don't be surprised if we see it go up from the 80K range to even possibly close a week, having completed that mean reversion at some point. And in fact, it did that. Right, a good solid amount of days before the end of the week. And it hit that mean reversion. What was it on, like Tuesday or Wednesday, something like that? Right, so it's not like these things are mathematically improbable. Right? It was in fact very probable that it would happen. And what does it tell you about what's happening this week? As I mentioned earlier to you in the day, well, again, it's the VEPs that are telling you which way to look, right? So if you look at the weekly variance and the weekly volatility and the weekly entropy, you should notice something. Also, if you look at the new weekly central weekly range of the VRE and the new central daily range of the VRE, you should know how to read this if you are reading the VEPs. If you don't, come and ask inside our Discord. I'm sure people will be happy to answer your questions. To go there, you just go to alphatradinghq.com/Discord. Right? You just go there and you can get the answers to those questions, whatever the questions are that you might happen to have. Like, how do you read the volatility? How do you read the AVQ? How do you read the ALR? How do you spot divergence? First of all, spotting divergence is fairly easy with that tool because it's actually built in, right, as a learning device. So you can see when the returns are moving along and the price action's following it, not causing divergence, or you can see when the returns are moving along and the price action is out of step. And when it's out of step, it causes that imbalance, and that's what causes what creates that divergence between the returns and the price action. So you can see that very easily with the ALR, which again is a free indicator that you get when you ask for the free volatility starter pack of indicators. Now, how do you get those free volatility starter pack of indicators? Well, you just go into the Discord, go into the request support channel, and then there's a little button there that says create ticket. And you just click that button, and when you create that ticket, you just say you just type in that you want the free volatility starter pack of indicators, and you include your TradingView username so that we can hook you up with the indicators, and you get access to a chart that we give you access to, which is pre-populated with those indicators on them. And all you got to do is set up the source on one of those indicators, the AVP indicator, and the ATPC. You got to correlate the source of the ATPC to the relevant AVP. And again, if you don't know how to do that, that's fine. You just ask in the channels, and people will be happy to help you do that. It's really easy. It's even explained in the channels that you'll have access to with the information about each indicator. You have, once you get access to the free tools, you get access to a number of channels about the indicators that you have access to. And you also get access to the live chat, with the chat with the other traders who use the VEPs, the main chat channel. And you get access to join the live streams, which are what we do starting Monday through Friday at 9 a.m. Eastern Time. And there you can actually join by voice as well as by text chat once you've requested your free tools. Otherwise, you can, if you haven't requested the free tools, then you can still join in by text chat. But yeah, the tools are free. You may as well request them. Even if you never use them, that's fine. Also, when you're in the Discord, you should check out the free tools channel. And there you can get the free volatility and entropy cheat sheet, which will let you learn the 6 tendencies of the probabilities of the direction based on volatility and its correlation to the PA, and entropy and its correlation to the A2EPP or the SCP. And if those things sound complicated to you, that's just because you don't know what they are yet. And you can learn all that for free. So again, just go into the Alpha Trading Discord for that. And remember, when it comes to what Bitcoin is doing this week, is it going to hit 100K today? There's a probability. Is the probability very high that it'll do that today? It's more than a 10% move. It's not like you can't do that. If it does, it's a big fat outlier, and you should certainly be looking at, if you're scalping, you should be looking at taking profits on a 10% move. If you're not scalping, if you're just holding long term, then what do you care? Just keep on holding, you'll be fine. If you can hold for another 5-10 years and longer, I'm sure you'll probably be very happy that you did. Who knows? Maybe not. Maybe it'll go to zero, but it certainly doesn't look like it's going to zero anytime soon. And frankly, if it does go to zero, hey, I'll be buying a whole bunch at zero. Let it go to zero, even for a day. Why not? I'll get as many as I can. How about you? But yeah, if you're just holding, then trading doesn't matter to you. But if you are trading, then what really matters is the low time frames and not the high time frames, right? The high time frames they just tell you the big picture of what's going on. Okay, on the big picture, yeah, it's generally moving up. It doesn't mean it doesn't have pullbacks even while it's moving up, right? And if you look at the lower time frames, you definitely see that it has pullbacks. See plenty of up candles and down candles, one after the other. And you could just look at CoinGlass to see how many people get wrecked, even while it's going up, right? People getting wrecked on longs as the candles are moving up. Why? Well, because when it has like a tiny little pullback, even during a candle, people who have insane leverage, right? If the candle moves like 1.5%, which happens a lot in some candles on Bitcoin, right? Or even if it moves 0.75%, if they're like, 100x long or more, when you add in the trading fees, they're getting wrecked, right? And if you're like even 50x long or something, and the thing moves like 1.75%, add in the trading fees, and if you've taken like a maker order on an exchange that doesn't give you free fees, a taker order, right? If you're running a taker order, so it means you want an instant fill and you're paying a premium for that. Guess what? You're also paying a premium when you get liquidated, right? So it's not worth it to have positions that have insane leverage on them. You're just gonna get wrecked. It's the bottom line. You're just going to get wrecked. It's not worth it, right? It's just not worth it. The best thing to do is to keep your risk management tight. That's like 90% of the game right there. Right? Even the TA and everything else of the VEPs and everything else, as awesome as it is, and it is awesome, because it's leading information, it shows you where the stuff is going and everything else. But if you don't have good risk management, you may as well not trade, because you're just going to lose money. Now, what does that mean, good risk management? It means not putting on the table more than you can actually afford to lose. Hang on, I'm going to just show you guys. Oh yeah, there you go. Some good old-fashioned earth digging. Yeah, good stuff. Good stuff right there. We got a digger. Risk management is all about not putting on the table more than you can afford to lose. Risk management is all about being consistent with your trades, being consistent with your strategies and your position, and making sure that whatever you're actually risking, right, that you actually don't let your position become worse because of stupid risk, right? Thinking that you can I'll just change it on this trade, my management strategy, and that's okay. It's not okay, right? You need to be consistently disciplined. So if, let's say, your position size, is whatever, Y, you don't just change that position size randomly during the trade without knowing exactly what the risks are, what the reward is. And you don't just randomly change position size, between trades. You stay consistent with your trading strategy of how much you put on the table, what, if any, leverage you use. I would recommend not using any, but you're trading assets you can afford without leverage. But if you're going to use leverage, you should calculate it extremely well. You should know exactly what the risks are of using leverage. You should know that the house will give you free money. All right, any leverage that you're lent by the house, they intended to get it back, and they will literally do whatever they can to get it back from you. If you win from them consistently, they will do whatever they can to get it back from you. It doesn't matter if you Bitcoin, Litecoin, Dogecoin, ETH, Sol, Coin. It doesn't matter. Right? They're not there to give you free money. You might think they are because they have very good marketing. But trust me, as one of the people who has marketed their things, I can tell you they're not there to give you free money at all. Right? They are there to take your money. That's their business. And if you don't start acting that way, as a person who is trading, if you don't actually start doing what is required to safeguard your assets, I guarantee you will lose them. Because again, that's the business they're in. Oh, it looks like we're stuck again. Why is it you getting stuck like that? I don't know. I don't know what's going on here. We're gonna close this video now and see what's up with that.